Great. I'm going to kick it off now. My name is Cory Parnell. I'm CEO of BGM Group, and I'm excited about today's subject in regards of budgeting and forecasting. Probably the reason is about 5 years ago, as an organization, we really shifted from an old method of doing our budgeting and forecasting to a revised, and we'll be kicking that off at the end of this month ourselves and beginning of October process to complete before the end of the year. And I'm excited about our two speakers here, Brian Stueve as well as Patrick Wheeler. Brian and Patrick, if you would just take a minute, kind of introduce yourself and your role within BGM.
Yeah,
Brian?
I'm Brian Stueve. I lead the outsourcing group here at BGM. I've been working with small businesses, transforming accounting departments, providing advising to business owners for the last 20 years, almost 20 years, I should say. In that time, I've just observed the low expectation with regard to the finance organization and how it can help the business perform. And one of the tools that I don't see typically in a small business is budgeting, what we're going to be talking about today. So I'm excited about this topic. I hope we can bring some passion to it because this group has a lot of passion with regard to it. Go ahead, Patrick.
My name is Patrick Wheeler. I'm an outsourced CFO for BGM. I've been here for about 2 years, a little over 2 years. I came from a big corporate insurance, Travelers, a Canadian insurance company, heavily involved in the IT, finance, planning, controllers department, that type of stuff, and just really want to discuss the benefits of budgeting and planning.
Yeah, so great. Again, excited about this subject matter. Don't get too excited about accounting. But one of the first things I guess I'd like Brian and Patrick, if you guys, Patrick first, or Brian first, why build a budget? What is the real value of this?
A great question, Cory. First off, what it isn't specifically trying to predict the future exactly. Nobody can do that. If I could do that, I wouldn't be sitting here. But when it comes down to why you want to perform or put a budget together is really about visibility within the organization. And what visibility will give you is a lot of things. At least that's what we've observed when we've implemented this on behalf of our clients. Mostly when you have visibility into the numbers, you're going to change people's behavior because it's going to give you a compass of what's working and what to focus on, and almost as importantly, what not to focus on and how the business makes money. The other thing that it gives the business owners is it can hold people accountable more easily because you have that visibility. If the expected results aren't exactly what is projected, and oftentimes there's a story behind that. Some additional things or value that we've seen in our client base is just easily identify opportunities for the business to improve. And as you organize and refine the data, it'll enable you to dive deep into the different components, and more visibility generally results in better business performance in terms of just knowledge of where the business makes money, where it may not make as much money, and where to focus on.
Yeah, Patrick, do you have any additional thoughts?
Yeah, I would say, why build a budget, right? I think it's a roadmap to your long-term plan. And really, you won't succeed in your long-term plan if you don't have a way to get there. It's no different than driving a car to a destination. And a lot of times, the long-term plan it's a journey, and so you have to take baby steps. And budget is the way to do that. And like Brian said, I think the biggest thing is changing behavior and understanding you know, where you're missing the mark in regards to whether it's revenue, OpEx, different product lines. And that's where the data really comes into play, you know, breaking things down into manageable reporting too, right? And, you know, and we'll get further into that later in the webinar, but, you know, really understanding instead of looking at a packet that's 260 pages long, being able to really, you know, look at it on a 10,000 foot level and then on a, you know, down in the weeds on a invoice by invoice basis or customer by customer. So I really think a budget and refining that year in and year out is critical to success, especially in today's economic environment.
Yeah, one thing it
Yeah, I
go
I would
ahead.
just add too, Patrick, is like you just said, different businesses have different approaches. It's really what they want to get out of it too. But I don't think the answer is nothing. Like I philosophically, I think every business should have at least some type of budget or some type of forward business plan or business objectives in place. And a lot of times we'll see entrepreneurs just really be in the business, and I call it the back of the mind, front of the mind. They may know it in the back of the mind. This process brings out some of that stuff and brings it forward to the front to help the operator perform better.
So I think,
Yeah.
and one last thing on this, and just so everybody knows, you know, if you want to ask questions in you know, as we go, please do. You know, for me, it's, you know, if you don't have a budget or a plan, it's, to me, it's like, well, I hope we get there.
Yeah.
And I really don't like,
So
I hope we get there. I want to have a plan to get there. So, you know,
hope
and
isn't
let's
a
see how we
strategy,
do.
right?
Exactly.
Yeah,
Yeah.
exactly.
Yep. And again, what we'll be doing is we'll be recording this and then sending it out for everyone that was able to make today's webinar on this subject matter, as well as send it to the individuals that weren't able to. And as Patrick mentioned, if you do have questions, please just put them in the Q&A and we'll address them as we go along. And I know within our organization how the budget really was done. It was done by, you know, two or three people within the organization. And as many know, we have a lot of different areas that besides the CPA firm, there's like four major departments that we have, as well as wealth management, the trust and estate services. So one of the key thing for us as an organization is really involvement of different stakeholders in the whole process. Patrick, can you talk about, you know, identifying
Yeah.
and getting those key stakeholders
Yeah.
involved?
Absolutely. You know, in the before a lot of this technology has come to light in, you know, recent 10, 15 years, you know, budgeting was always a painful process, right? It was multiple, you know, hundreds of spreadsheets, and typically, you know, one person got the load of all of it to try to, you know, consolidate it and this and that. And so really a new kind of approach to planning and budgeting is having stakeholders and kind of siloing everything from HR to marketing to sales to, and maybe even multiple in sales, depending on product lines or yeah, or, you know, whether you're selling widgets or insurance, you know, everybody has different product lines. Um, and really understanding, you know, there's different levels of stakeholders too. There are people that are going to just want to see that 10,000 foot level. And then there's the managers that are going to see managers or even, you know, senior, you know, some senior people will want to be on that 5 foot level or right, you know, right on the ground, because that's what they have to answer to. And that's, and having these stakeholders, I believe, is a really, really good way to facilitate a change in behavior of having the budget and plan have teeth. So when you go through that monthly review, you know, and you're looking at your budget versus the expenses and or revenue that's coming out of that, you know, the budget or the variances that is, it has teeth. And so then someone has to answer to, you know, why didn't we make our sales plan? Why didn't, you know, is OpEx up and over, you know, what we thought it was going to be? Well, there's this one-off. Okay, well, that's not bad, but if it's systemic, then that's a problem. And so, and that's where I think a budget really holds people tight to a goal. And so, you know, a lot of times if you don't have a budget or it doesn't have any teeth, you get a lot of expense creep. And then all of a sudden, well, it'd be really nice to have this person, hire them. Let's just do it. And then all of a sudden, there's no plan to it. And so really it's understanding the different metrics behind it. And the plan also makes you think hard about the metrics behind what makes you successful. So I think that's all I have in regards to stakeholders. Do you have anything, Brian, to add?
No, I think that was good. The only thing that I would add is the experience that I've had is when you bring other people in, you get some camaraderie of the team and the way different people have perspective on the business and what they think is important. And at least it gives an open forum for dialogue back and forth in terms of that discussion. And again, that comes from the finance leader, and we'll get into that in a little bit about who do you really need to push with regard to questions and hard questions that sometimes need to be asked with regard to the business. So I think it's very important to get the key people in the organization involved in that whole process so that they get engaged. And then furthermore, the owners or whoever is going to hold them accountable, there's a two-way street there that they have an opportunity to develop it along the way as well.
And then one last thing on this too is, there always has to be a gatekeeper in regards to the plan or budgeting. And so, somebody that's going to pull it all together and make sure that it looks right, smells right. And then really, in my thought process, the best way to do it is create those silos, build the budget from the ground up. And then once it gets to the top, understand what that, what the net result of it is. And then a lot of times what will happen is then, those people that are looking at the 10,000 foot level push it back down and say, okay, we either have to find more savings, change a staffing model, bolster advertising to get more sales, so forth and so on.
Yeah, agreed. And I think this also overlays, there should be a business plan with some business goals and objectives as well. This is just a component of that piece to the business, what they should have.
Yeah, and again, within our organization, we really went from like 3 people involved for all of our different entities and service lines to we've got 18 people involved. And everywhere from, the human resource, they've got their area of budget responsibility as well as even our fund committee. They've got their budget that they manage and again, there's certain revenue lines or expenditure lines that we're looking for key stakeholders to have responsibility for. And actually each one, I know, like, for example, our office supply expense we felt was not controlled very well. So we gave that the responsibility to really the stakeholder and her team to manage that. And that came in alignment. So again, just really thinking about identifying the people to be involved and then what information do they need to help build out the budget for the year. So really, it kind of leads me into, what's the importance of a budget foundation? I mean, how do you really create that or develop that? Patrick?
Yeah, so I think, a foundation is no different than a foundation in a house, right? So if you have, a suspect chart of accounts, if you have, your accounting isn't great, it's going to be really hard to track and to a plan or to a budget. And so really, I think it gives you a lot more clarity on how you structure or how you can restructure your GL to fit the needs of your long-term plan. And so whether that is, and the foundation has to be as granular as you're going to report, right? So I've seen companies that they go so super granular, but then they only look at it at a mid-level or high level, on the management reports. And so that doesn't make any sense, right? You're doing all of this legwork and no one really values or looks at it. But then I've seen it the other way too, where all of a sudden they budget on the very top level and it adds no value because they want to see the granular detail. So the foundation is huge in looking at your chart of accounts, whether you have departments, locations, different classes, depending on your ERP, is really to understand how all the data is put together, how the journals are all put together, and what type of story does it create. And so the foundation, I think, is huge. And it's, Rome wasn't built in a day. So, for the, first year, budget process, it could be a little clunky and not as refined, but as you move forward the next year, you kind of take those band-aids off and fix things and create more of a playbook of how are we going to do this more efficiently, so it doesn't take hundreds of man hours to do. And bigger corporations, that's hundreds, but in smaller corporations, not so much. But I think that's where you want to get to, and you want to make sure that those foundations align with your long-term plan.
Yeah, great point.
Yeah, I think that's great. I think the other thing is I know, like, for one of our clients, they had multi-location type of scenario, and they typically looked at the business really as a whole. Didn't really have any formalized budgeting, and we were able to break that down into pieces. Again, it gets back to that big word, visibility, and the ability to pull out some of the accounting and the transaction flows by location. We started to get some traction in terms of trending by location, and then that visibility actually, provides the management team going forward how to budget, what to look at from this, what is needed at each location.
And I think the location, yeah, and like you said, Brian, location I think is huge.
Yeah.
Or more, locations, just for the fact that, let's say you're running, 5 different restaurants, right? And your hours are all, really long, you're open from 10 to 1 in the morning or something like that. Let's say, it's a restaurant. And all of a sudden, you can look at those different locations, and maybe for location A, that works. But then, location B, it's not traveled as frequently. So then the hours, right? So then when you get down to that granular level, then you could say, well, location B, we're going to, shrink those hours from noon to 10 or something like that. And it's all about, that low-hanging fruit of expenses that a lot of times people take for granted, of like, well, I guess we have to just do this. You really don't. And so I think that foundation really builds on saying, okay, we're going to show these metrics and plan around that.
Yeah, and that didn't take, that example that I was speaking about, it didn't happen overnight, right? Because they never captured those transactions by location. So we had to build in the accounting processes the ability to tag payroll transactions, all these other things, invoicing by location, so that we had some basis or foundation to build some trends by location. And I think, Cory, you do that internally to BGM as well, right? With the different groups.
Yeah, again, the CPA firm, we broke it down. I know within our other groups, they're breaking down different service lines like trust, estate, 401k services, and there's different parties that are responsible for each one. So breaking it down within the financial statement each month, year to date, for the quarter, are they on target for the revenue growth, and so forth. So yeah, that was a big thing in regards of identifying the different service lines, as well as the key people, and then laying the foundation, which kind of leads me into my next question is, now you kind of have a baseline foundation for doing the budget. You kind of got your business goals identified, and the key stakeholders. So what are the process in regards of key question to ask the different stakeholders at the very beginning? How do you get them involved in this process? Patrick, I'll start with you.
Yeah, so I think the questions that need to be asked are, where are we now, and how do we get to where we want to be in our long-term plan? And that's why you pull in the appropriate stakeholders, and as they formulate the plan, and you do it in phases. So all first phase, you do kind of a rough draft of it, and then the questions that are asked are, okay, for example, sales. Are we acquiring anybody? Are we relying on organic growth? Are we bringing on a new product or product line? And what does that look like on the HR side or the OpEx side? Are we going to have another location? All of those things and all the different stakeholders, you need to answer to that, so that once you put together the plan, let's say for sales, they say, well, we're going to hit a 20% increase in revenue this year. Well, how and why? Right? You have to ask those questions of, okay, you can't just think it's going to happen and it's going to happen. You have to be very deliberate and understanding, okay, that sounds great. Oh, we're going to raise our prices. Well, if you're going to raise your prices, you're probably going to lose volume. So, how does that interact? So, those are the different questions that you really need to ask. And, employee utilization, what does that look like by location or by department? And, if the bandwidth is 50%, then, we have to look at maybe reduction in force. If it's 105% or 100%, then we have to look at adding some more heads. And what does that look like? And how does that relate to the revenue that's already being generated? And then it's a whole different conversation, I think, when you're talking with non-revenue generating cost centers, right? And what does that look like? And is there enough revenue and gross margin to sustain that? And so those are I think, some of the high level questions that need to be asked. And then from that, it kind of, and I think one thing that I would really caution would be going down the rabbit hole, right? You can, once you start digging in and you can almost get lost in the weeds. So that's why that gatekeeper that I talked about earlier is really, really important to make sure that, you can go through phase 1, phase 2, phase 3, how many ever phases you have of the planning process. And you can pull yourself back out of the weeds and understand where and how to get to the end state of your final plan that either you send to the banks or you send, to the owners or whoever the last stakeholder is.
Yep, I think
Yeah,
it
and
all
again,
starts
go ahead.
like you said with the revenue number, right? You talked about like the acquisition. Is there any acquisition plans, not just organic, looking at that? But it all stems from that revenue and really understanding the opportunity in the market that the business is in. And Cory, you always say every business has some cyclicality to it.
Absolutely does.
Including our, even the consulting and the CPA firm, right? There's always ups and downs with how the economy is and, with regard to that. So I think that's just reemphasizes why that budgeting process and looking at the opportunity in the marketplace where the business plays and staying in tune with that is important.
Yeah, and again, for us as an organization, really starting with the conversation around revenue, where we really see our growth opportunities. And Brian, as you said, some of it's organic growth, some of it is key acquisitions or key employees to hire. That's always important. And again, it just gets the different stakeholders involved in the whole process. So, for example, in the CPA firm, if we're looking to add some key people in some specific areas, but we know that we'll probably have to look for having an organization do a national search. Well, we should just budget that cost of doing that. So again, just for us, we start with the revenue that drives a lot in regards to the personnel needed to support that revenue, whether it's increase or shrinkage. And just gets everyone focused in the right area.
Yeah, I think I have a visibility story with regard to the revenue that comes to mind too. We were working with a client that when we were doing some of the budgeting process, we were at a granular level because they track all the revenue by projects. And we started to look at their margin by project, and we separated the good from the bad and said, what are different about these two buckets of projects? And the owner basically said, you know what? The good ones we always write proposals for. The other ones we're in a bid process for. So now it was more focused on how how do we develop more opportunities where we're proposing versus bidding through the RFP process? And furthermore, if you're at full capacity, do you even want to take on the RFP process if you're trending where the margin isn't as good? So that's where the visibility comes in.
Yeah, and I think one of the other things that really kind of comes into this, the questioning techniques is, I call it, budget is nice. But even within our organization, we validate the actual performance for the month or quarter, but our conversation really is about, next month, next quarter revenue. Are we on track, off track? And it's really getting us more focused, looking at the activity, not that what just happened, kind of back to what you're saying, Brian, is tracking and looking at activity that had the leading indicators that have happened or that we anticipate to happen, and is that on track, and how do we influence that? And again, nice thing is when you do have that budget, for us, we might do reforecasting. So for example, we had to add some additional personnel with no additional revenue. So how does that impact us? And one other line might be, boy, we're not hitting the growth that we anticipated. So how does that impact? And what's the real additional capacity available with this group? And how do we utilize it? Or pare back future hiring based on that performance. So it's really this whole process, from our perspective, helps lead the conversation, not just on a historical, but forward-looking component. And that's why the effective questioning techniques aren't just on the preparation of the budget, but it's like an ongoing conversation throughout the year.
Yeah, I'm being just
Yeah,
curious. I know, Patrick, you always say, like, why does this look like this? I know you're always big on that. Like,
I like the why. And so
yeah,
it,
it's
and
like
so
there's
for
got to be
me,
a why somewhere, right? I
there
mean,
always has to be a why, and no, I agree 100% on that, Cory. And I think to like double down on your last comment, it changes the behavior. And so,
mhm,
right, it's what is this? What story does this tell? Right? Are we overstaffed? Are we understaffed? Are we
mhm,
underperforming in sales? Is our rent too high, too low? What are people not turning off lights? There's a
mhm,
story. And I always like to understand the color behind it because there always is a story and there's always that why. And so we
mhm.
just need to tackle that why and understand. Okay, well, we need to fix this moving forward. And or oh, it's just a one-time deal. Okay, well, we'll have to make sure that we stay on top of it, whether it's a
Yeah,
roof leaking or whatnot. So
right. Yeah, it's not about like at the beginning of the year just to get everything accurate from the future, right? It's just about
right.
course correcting, gaining visibility so that you can course correct, ask the right questions, and somebody needs to lead that or drive
And
that.
right, and as Cory said too, as it's the story looking forward too. So a lot of
Mhm,
times, and I've been in with clients and with corporations that we did a reforecast every quarter.
mhm,
And from so really your plan was the first 3 months of the year, and then after that you're reforecasting. You don't have to do it that way, but then looking at like the P&L on a pro forma basis, so like a 3x9 or a 4x8, to understand where you're going to be at the end of the year. Are we going to miss it greatly? Okay, what are we? And if we have external stakeholders that are expecting you to hit this, what do we have to do? What is that lever that we have to pull to get to that external stakeholders goals? And so and that's all pairs down to boils down to the questions that are asked and the behaviors of following a plan.
Yeah, and
yeah, I
Brian,
think
one
it's
of
no
what
different than I know you're into football, Patrick. It's no different than a coach course correcting during a game.
Exactly.
You're a
No,
big
it's just like being
football,
at halftime, right?
right?
So
You're
like
like, oh,
quarters
that's not
halftime.
working, or this isn't working. Let's go out and let's instead of run the ball, let's throw the ball. I know you won't be big on that,
Correct.
but
Yep.
the running back.
Yep.
Yeah, and I know, Brian, I mean, we were just talking this morning that you had a conversation with the client in your monthly meeting. And one of the big things there was looking at the performance year to date and the balance of the year. It was like, oh my God, the profit that I'm going to make is significantly more than I anticipated. what are the things, some of the things that we could do to either reduce or defer taxable income. And on the flip side, if you're not having as good of a year, what does the cash requirement for taxes look like? So it isn't just a December, tell me what you think it's going to be. It's a conversation throughout the year. And I know that you're having a meeting with the client next month to specifically start that conversation.
Yeah, this was just brought up in our course of generally all of our clients we meet with monthly, talk about their performance and how we're doing to a forecast or actuals. And based on they're just killing it this year. And so I pulled the tax resource, part of the tax team that we have at BGM that works on the account. And so we're going to meet with them and kind of brainstorm what we can do to minimize the tax impact of that performance here in September, early October, so that if we do come up with some good ideas, that we can implement them in the last 2 months of the year, so we have a bandwidth versus talking about it in December. Now December, it's almost too late to do any course correcting. Not impossible, but I always like to do things planned. I'm a planner, so getting ahead of that is key. And again, I'll go back to the word visibility, right? Hey, we're tracking, we're looking at the next 3 months. We don't see any big shifts. We're going to be performing the same way. Okay, well, this is where we're going to come in at. So we and getting those estimated payments made too is also critical for the tax group to calculate that.
Yeah,
Yep.
yeah. Well, that kind of leads me to what is really kind of the top or the timing, the process to optimize, the budget process.
Yeah,
Um,
so
and
yep. Again, I'm always being very plan sensitive. So unless the business is very cyclical in the last part of the year, you should start the process no later than the first month of Q4 prior to the next year. And I would say not like a big one-time meeting. It's more of a repetitive process. You have a kickoff meeting and you go through kind of what we've just talked about here of the process, who's going to be involved, all those things. And so that you're not crunched and doing ending a budget and projection the first quarter while you're in the year that you're in. You should have that done by December, and absolutely no later than January. That should be buttoned up. And it kind of, again, the process kind of ties everything that we've talked about. But the other key thing is oftentimes we've talked about it's asking questions, the whys, and we believe that we're really successful asking those questions from the outside because we have no internal political whims at all. And we can ask those tough questions when you're going through this process. So we feel from an outsourcing perspective, this is one of the value adds that we really can drive through a small business very effectively.
yeah, Patrick, do you have any
Yeah, and I think
additional
the
thoughts?
timing, I agree with Brian. Really start getting your ducks in a row and have that gatekeeper pull. Even if it's just a base level plan together, and then push it out by the second week in October. I just want to caveat, given that it's the fourth quarter and you have Thanksgiving and I think we're all U.S. based, so Thanksgiving, Christmas, or the holiday season, I would say. And so then a lot of people are out. And so, it's a very difficult time to collaborate with other people. So, the earlier, for example, travelers, we started our process in late July. So it was vastly different. I mean, granted, very large multinational company, but it was an undertaking. And so depending on your size, I think really impacts when you start it. But I think that kind of a rule of thumb is, end of September, beginning of October, and then, try to button it up in a perfect world prior to Thanksgiving, if you can. But you have a couple weeks in December that you can get it done. And in actuality, when you look at your financials, January won't be closed till mid-February. So like the last date would be, February, but February 1st. But yeah, I think, the process and the timing, just, I think I like doing that. I can't, the agile project planning, right? And do it in sprints. And so, making sure that or phases, as I put it, but just get something on paper and start refining it. And so, sometimes it's scary and hard, but, just get something on paper and then continue to ask questions, that why and how are we doing this and how does this relate to our business plan? And then by, a couple weeks go by and, a pretty solid plan.
Yeah, I think that's a great point. The holidays really, as more I think about it, years in my career, it's like that part of the year is a tough to
It
be
is.
doing anything extra within the business. Um, Same with the kind of the summer time frame, but
Right.
totally agree. So you want to, like you said, the ultimate goal would be by Thanksgiving, and then you
Right.
have a grace, but no later than the end of January is for sure a hard stop.
Yeah, and I know, for example, that our CFO is scheduling meetings right now to kick off the revenue component of that, as well as a lot of organizations. I think 70 some percent of our operating expense relate to personnel. So I know that component is being pulled together as well. So again, just our stakeholder, the CFO driving with a meeting with the different service line leaders and having a conversation in regards of revenue. What data, what information do you have? What can we pull together for you? How do we support you in looking at this and forecasting? Might be lost clients, gain clients. What's that pipeline look like? What does the future uh, economic outlook, because each one of our different service lines are impacted completely different by the economy. So definitely,
And,
trying to take that.
and project based versus, reoccurring revenue and
Right.
separating out
Right,
the revenue based on that.
right. And again, seasonality, looking at that. And again, like a CPA firm, basically, I relate that to a farmer. We've got our crop that needs to be harvested from January 15th through April 15th. I think that's like 68% of our annual volume is during that time frame. So how do we manage through that? How do we communicate it? So for sure, we need to have our budget completed sometime December for, well, we target all of our organizations, but definitely the CPA firm needs to be buttoned down by then. Um, and so then what tools, whether a lot of clients I've seen, they've got a spreadsheet that it's like their tool is, oh, I just put 5% to last year's revenue and I estimate that and I'm going to increase my cost 3%. That's definitely not the budgeting that we're talking about. But what tools, Patrick, do you use on helping clients not only just build their budget, but connected to here's the historical activity, and then you talk about reforecasting. What does that mean?
Yeah, so I mean, a lot of people in the past, you have 80,000 spreadsheets and you're trying to consolidate all of them, and it's human, human nature, there's going to be errors in that. You miss a cell or you do this, or a formula doesn't update, and then all of a sudden it skews your results, and then you could be making decisions that aren't valid. So, the ability nowadays to have financial systems, whether it's Oracle or IBM Cognos or Giraffe or Sift or Data Rails Cube. There's all these systems, and some of them are very expensive. Some of them are really, really cheap. And I would say there's a gamut between, a mix between the pros and cons of each one. But a lot of them connect right, have an Excel add-in that's right in them to consolidate, push data, and then consolidate everything together. And I think to get to that side of it, of the planning process of getting away from spreadsheet chaos, I would say. There's another word that I could use too, but I'll use chaos. Um, so to go to a financial system and really uh, you know optimize all of the work that's going into it. And so then not only that, all these systems are holding your actuals too. So, I have clients that create their plans in Excel, and then they try to formulate and massage the data to get it into their GL, and then the output of the GL is not good. And so these financial systems and the ones I named are very dynamic and moldable. And I think for my input on that would be, I think you'll say depending on how big your company is, the amount of money that you're going to spend on the human side of it, of creating spreadsheets and trying to pull this together, you'll save by buying or implementing the software. And if you want recommendations on which one, depending on your business, contact me and I will absolutely give you the pros and cons of each.
Yeah, I wish I was 10 years younger and these tools were around 10 years ago.
I agree.
I know there's some expensive ones out there, but we live in a world right now in the last 5 years. I think that the technology solutions out there for SMB space is phenomenal at a price point. It's just,
Yep.
it's amazing to me. So yeah, I guess just to add, I wish it was around 10 years ago, because the key piece to that, like you said, Patrick, is that integration with the accounting system, and most of them
Yep.
plug right in. So it's not a problem to get the actuals to flow, and then
Right.
you can take it from there, and the tools are phenomenal.
Well, yeah, and a while back, you'd have to have a computer programmer, you would have to have an implementation team and this and that. The majority of these systems, these planning systems, are push buttons. So, not all of them, but some of them. And so, essentially it's a couple days maybe that it would take. Some of them are very, how do you say it? A lot harder to implement, but depending on your need, right? It's no different than going out and buying a car. If you're just going to commute, you buy a little, gas efficient car or an electric car. But if you need to tow a Bobcat, then you're going to have to buy a truck. So everybody has different needs, and I think as long as you understand that and align that, like I always say, with your long-term plan, right? Because I've also seen that where somebody buys something and it fits where they're at right now, but it won't fit them in the future. So instead of recreating the wheel, kind of be forward thinking when you do implement any type of financial software, just so you don't waste any time learning and relearning different softwares.
Yeah, and you make me think of, I know one of the clients that you work with, Patrick, that I think they're about a $28 million organization that really has two core pieces of the business, but by plugging in the tool, you're able to create just it automatically updated with financial results for each department. So each department manager had access to their performance, and you can limit, like, if their controllable expenses is really just their labor and then some software costs, you can limit their what they can see to, oh, here's the revenue we generated, here's the controllable costs that I have responsibility for. So again, these different tools that plug into, whether it's QuickBooks or Intact, Sage Intact, it's just really a great tool that you don't have to, like you said, hire a programmer, make it connect and stay connected with these other platforms, as well as one packages that we've just started using is we can do consolidation. Where one of the other platforms we were using, we weren't able to do that. So we can take multiple QuickBooks and do a consolidating statement of those through the use of this platform, which again, the advancement of technology in the last 5-10 years has just been phenomenal. And I know this, I'm kind of bleeding over into a different subject or subjects, but really re-looking at your accounting processes. I know that's something that we preach about all the time, even looking at our own processes, how you do it, how you leverage technology, because how you do it today versus 4 or 5 years ago is completely different. Everything from processing credit cards to vendor invoices to reconciliation of accounts, and as well as plugging in your financial reporting package with a dashboard. Those are all great tools that can be used. I know I'm kind
Yeah,
of
but even think about when you started out, Cory, and how transactions were recorded. Didn't you say you used the green sheets, wasn't it? Or what was that? Was
oh
It's
that
called a
yeah, yeah,
sundial.
yep,
was it what?
10, yeah, sundial. Yeah, it wasn't a 10-column spreadsheet. It was a 10-column piece of paper. Yeah, yeah, evolution, super
The-
calc back then.
No, but I think
So,
the evolution is valid, right? I mean, 5-10 years ago, the tools out there, and this is off subject from the budgeting piece, is that ability to transaction capture and code automatically with software and push that role out of the accounting department into operations is key without a whole lot of time commitment. So it's just the efficiencies of software, and it's not an expensive software endeavor. You know, sometimes you get a
right.
software demo and you're like, oh, I love that. It's like, well, I have expensive taste, I guess, because that price is way out of our. That's not the case. The price point is really, really advantageous to
And I
implement
would
this.
say, on the financial software, it's all about telling the story, right? And so if I can get my people to do less busy work and understand what they're doing and facilitate the color around the month and or the quarter or the year of what happened, good or bad, you know, all these financial software systems, that's what they do. And they make it much easier for everybody on every different level to see their own picture. So,
Yeah, and the thing that comes to mind for me is that you're really with minor investment. You're going to save money, but you're going to get better information more timely. And also, if you are taking time to do a budget, and you could do baby steps on the first year. Just again, for our organization, this will be our really our 4th year. And this year's a lot different than last year and is completely different than year one. So you can do it in baby steps to at least start to get down into that habit. And I truly believe for our organization that the benefit of us doing this has been significant.
Yeah.
yeah, but it's
I
just
mean,
about, it's
I'll
about
go
building
back to
that
the
playbook.
I'll go back to the football analogy. You don't need to
No,
throw it in the end zone the first time you do this. You can get some first
no,
downs and but start with something. I don't think any small business out there should not have a budget or some type of plan for the next 12 months. It's just like me
and
trying to lose weight. I
mm,
don't, without a plan, I'm not going to lose weight. Just not.
yeah, and again for us, even when we did it the first time, I can't remember if it was 4 or 5 years ago, going through and just looking at specific areas of expenditure, we found out, oh, we're paying disability for these two individuals and they haven't been with us for 4 years. But they were on automatic payment. We had turnover within the accounting department. No one really, it's like, oh, okay, well, this is the amount that's being drawn out of the account. So again, it wasn't material that one, but when you add up everything, I mean, we're talking quite a significant amount of money across all organizations.
Yeah. So I think the word visibility is key. Like that made that
Yeah,
visible, right? Like literally.
Yeah, yep. Um, I don't
Any
see
other
any
questions?
questions in there. Um, so I do appreciate Brian and Patrick, you taking time out of your day to kind of talk about this. I know we're heading into it as an organization, that you're starting this process with other clients. And anybody that's listening to this, if you're not really sure how to get started, please reach out to either Brian or Patrick, and we can help you with it. And and again, it's really trying to get your business financial statements aligned with your short term, next 12 months, and your long term goals. Because they all lead into each other. The short term definitely leads uh, into the long-term goal of the organization, and empowering the right people within the organization. You'll see that they'll be a lot more engaged, especially on the revenue side or human resource side, and in the finance, getting real value out of your financial group with a minor investment. So again, I really appreciate your time, Brian and Patrick, and your expertise,
Thank you.
and
Thank you.
looking forward to kind of continuing this conversation. And hopefully, I always say, hopefully you got a golden nugget out of this conversation. And if we can be of help, please let us know, and have a great rest of the week.